Welcome to Trading Lounge and the US indices report, but I wanted to start with the FTSE and then the DAX and then move into Apple and Google and NASDAQ and so on in that way, because the European markets are in a weaker situation and the US markets are in a stronger situation. So while the FTSE and the European markets are rallying into their corrective phases up into these areas here, then it's possible for the NASDAQ and the S&P 500 to make a new high. The Dow Jones has got the same pattern as this here, and we'll be looking at that too. So we've got wave 1, 2, 3, 4, and 5 here for wave 1, and then a very clear A and a B wave here, and we'll look for a C wave here in 5 waves in 1, 2, 3, 4, 5 into the 61.8% area, and then struggle from that point there. So once this tests higher here and then this number here becomes a retested resistance, then you can catch the third wave to the downside here. But that number there as the retested resistance is a catalyst and a trade setup, and your signal would come from in there too. So the DAX is the same as well. So just really pointing out that some markets are stronger than others and some are weaker, but we're still looking for that turn, and we're looking at all the markets as they turn. So some have still got new highs to be made, and that's in the US market. So in this case here, we're looking for 5 waves down for 1 and 2 here, and once again the A wave and the B wave, and looking for a C wave up through into 10,300 here. So on the US markets, I'm going to start with Apple and Google. So on the Apple scene here, I just wanted to I don't have any answers here just yet. I wanted to see if the move up into 10 to 100 here would be in 3 waves or 5 waves, and so far we've got this as 1 and 2 and 3 here. We were looking for wave 4 to pull back 38.2%. It has moved through that. On the cash market, it does seem that the wave 4 1 lesser degree is actually at 96. It looks a bit odd here, but I need to give this a little bit of a chance here to prove itself. So otherwise we'll need to look at an A and a B and a C wave up here, and this down for 1 and back for 2 here. So down for 1 and back for 2 here. I need to gather more evidence. It's a little bit tricky to work to view this on a 5 and 15 minute chart to actually figure out the structure within this here. So we're just going to sort of leave it there. We're also looking at Google as a bit of a template too for this. So just looking at Apple here. Now the main point here is from this move up here, we can see this as an A and a B and a C wave here. Now it also can be bullish as well, but as an ABC, it's actually finished at this point here. So we could say that if a top is made through here, then we know that we're in some type of bullish move. But as it stands, an A and a B and 5 waves in here for the C wave can have this as a corrective rally completed here. So let's see how it struggles up here or moves up through here. And it would really need to move through the 61.8% retracement level. So we would need to see Google at resistance on this number here before we could turn it into a bearish mode. So bullish above this, bearish below this. It's a way off, but at least it's something else that we can actually look at and that we understand. We either know or we don't know, and this is what we'll be able to work out here, because this can also just be up for 1 here and back for 2 here and moving up here. So it's quite helpful in that. The NASDAQ itself can make a new high like the S&P 500 here, because the move here in the European markets, as you know, we're looking for a nice 5 waves down, and we basically we've got that in many cases, and now we're looking for the ABC back up and down again. But this little move down through here, it doesn't count very well as an impulse wave of 5 waves. It's more like a corrective pattern here. In terms of an A wave and a B wave and a C wave. Now, in that case, would make a new high here, but I wouldn't expect it to make a new high too much, probably into this number here. And the reason for that is that I can rearrange the wave count to fit this way just as well, in terms of wave 1 here and wave 2 here, and then 1 and 2 and 3 and 4, and all of this is 5. And because the extension is in this part of the structure here, that would mean wave 1 here and wave 5 would be roughly the same. Now, at the same time, we'd still expect it to make a new high above here. So still basically looking for 5 waves up here on the 15-minute chart here. We thought we had a bearish sort of move here, and we could still have that. This market would still need to prove that. It's just that this counts better as a wave A here, and then a B here, and then 1 and 2 and 3 and 4 and 5 here for the C wave. So an A and a B and a C here. But we'd still need to see this move up here. So we would need to look at this as wave 1 here and wave 2 here. And then obviously wave 3 needs to be a bit longer. So we'd see that as 1 and 2, 3 and 4 and 5 to here. And then 4 and then 5. So not really a huge move to the upside here. So it can either fail here as an A and a B and a C wave into this sort of space here and move down, or make a new high here and then fold over from this point here. So that's what we're looking at it in that point. And the Dow Jones we'll have a look at the Dow Jones before we have a look at the S&P 500. Now in this one here too, is very much like the European markets, where we have a very clear 5 waves down, and we're looking for an A and a B and a C wave back into this sort of space here, and then rolling over from here. So basically a break of that trend line would be helpful in terms of shorting. So on the S&P 500 and the Russell, they're really quite strong. So when we look at the S&P 500 here, this is a bit of a tricky one, because in this one I can see that we can possibly count this as 1 and 2 and 3 and 4 and 5 here as wave 1, and then A and a B and a C here for wave 2 here, and then fail from here. Okay, I can see that. It's basically forcing the wave count a bit. So, that's not a good thing to do. We need to talk about it, but it's not good to get fixed on that, because after all, we are in a bullish mode going to the upside here. And we are just meeting a level here, and we haven't seen this market actually fail from this price point, this minor trading level 1 here. And in fact, this is just a normal sort of corrective pattern, across the level, so to speak. But our wave count is telling us that we're close to a top, but the trading levels are telling us that this market hasn't rejected this price point yet here. So in this case here, we'd need to look at this in a bit more of a positive light, with one more move to the upside here in terms of 1 and 2, and then the third wave up here, the fourth wave and the fifth wave, and we would count the whole move up here just as I counted the Nasdaq as well just then. So it would still leave this as a wave 4 here. So basically I'm a bit confused about this area here at this stage here, because I can see some markets doing one thing and some markets doing another, and that brings us into one of the strongest markets, and that's the Russell. So just bear with me while I dig it out of the trenches. So in the bigger picture here on the daily chart, we've got a very nice A wave, B wave and C wave here. And this little orange line here is just here because it's the 61.8% mark. And I think it's important to keep it there. I know that we're heading sort of deeper into the resistance zone up here. But in the longer term picture here, if this and the market will probably dance around this 61.8% mark here. So this little move up through here, I've labeled this completely different here because this had a better wave 2 in here, and the S&P 500 could be like this too, so I'm totally aware. But in both cases, we're actually looking for the move up here in 5 waves to complete, and then looking for either more of a serious top to pull in, or just for this to pull back 61.8% and then move up from here. But later on in the game, if this 61.8% here becomes the support here after, this is like the arrival, the reaction, the first high above the level, the corrective pattern, and then support on this level, well then would definitely be going up from that point. And as you could see here, that would be giving us into the third wave here. So this would be wave 1 here and wave 2 here. So this has really got a nice bullish stance about it. Let's let's just drill into this little area here, because the S&P and the other markets are moving in this zone as well here. So just squash this up a little bit here. So in this instance here, I've rearranged this count the same as the NASDAQ as well. So this is wave 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 for the third and the fourth here, and then this would leave 5 waves to the upside here. So as you can see, we'd need to look at this as wave 1 and 2 here, third wave, fourth wave, and fifth wave. So it's possible for the Russell to move up higher there. It's also possible that this little wave 4 here, sitting here, can be 1 and 2 here. I don't think that's the case here, but this is more of an ABC, but just checking it out. So, but it's possible that this, this can fail a bit higher up here. That's the main point here. But like I mentioned, the 61.8% mark is right on this level here, well, very close to it anyway. So it's interesting to see how this is panning out across this level here. So once this 5 waves up here is finished, in the other markets we've got it as a B wave here, but I think that in this particular instance here, there's a very good case that this will just be an A and a B and a C wave here, and then further upside here. Okay, so I don't know that yet. We would need to get this here, this channel here, as a corrective move here. So we'll be definitely focused on this market to give us leads on the positive side of the market. We'll look at the weakest markets, which are obviously in the European basket, but the strongest markets in the US tend to be this particular market here. So we'll definitely be using this as a template for any further upside there. So just recapping a little bit, we're looking at markets topping. Some haven't topped, some have topped. Some have got a good bias to move further to the downside, and that's certainly on the European side of the markets, but that also sort of creaks into the US markets in terms of the Dow Jones. But then we've got the Russell, which is the strongest, and the S&P is kind of halfway between both of them, so a rock and a hard place for those. So we really just need to let them unfold a little bit. So the other point too is that through all of this, we will probably be having less CFD equity trades as well, until we've got a very clear pathway in the markets. Alrighty, cheers.